Hey traders, this is Blake Morrow with Trader Summit, and I have Mr. Dick Matthews from Pardus FX with us, and he's here to talk about his really epic short call in the sterling, trading down towards below 114 to a 113 handle. Great call there, Dick.
Yeah. Well, as you all know, and everyone watching knows that our Queen passed away last week and was buried over the weekend. And being boring, I actually looked up to see what cable was when she got ascended to the throne in 1952. And it was $2.23. So
wow,
it's pretty much halved in value in 70 years, which it's a tough one. I think we've got an interesting week ahead, haven't we? We've got the FOMC tomorrow, and then we've got the Bank of England on Thursday. And I guess those are the two events that are going to shape the market.
Well, we got and you can sprinkle in the BOJ in there somewhere too, right?
Yeah.
And
so you got I'm going to say it wrongly, the Norges Bank, or Norges Bank for Norway as well, which is the dreadful pronunciation.
Yeah, right.
Off this morning with a bit of a curveball from the Reichsbank, didn't we, with the 1% hike?
Yeah, the Reichsbank did do that, and the market responded not the way that you would anticipate. That you had, right. You ended up having dollar strength following that knee-jerk reaction. But are we going to get the same this week with the Fed or the Bank of England? What are your thoughts here? And how should we play the dollar going into this week and coming out of the Fed and the Bank of England? What do you think?
I would want to. I think the Fed's actually going to surprise the market. I think they're going to do 100 basis points. I think they're going to follow the Reichsbank, and I just wonder whether they've had discussion, because they're starting to sing from a similar hymn sheet, aren't they? The Reichsbank, the ECB, the Fed. They're getting really, really tough. I think the mistake the market's making is waiting for the Fed pivot. Right? It ain't going to come. They are going to play hardball, and they're going to destroy inflation. I think the market's expecting the Fed to hike up to 4.25% by the back end of this year and then start dropping rates. I think the mantra is going to be higher for longer. I think they're going to get rates up and they're going to sit with higher rates than we've got used to.
So what do you think the actual height or terminal rate's going to be? Is it going to be closer to 5%, do you think, or maybe even higher?
I think 4.5%. Be interesting to see what the dot plot says this week.
Yeah.
So on that basis, I would normally be a fan of going into an FOMC meeting, the anticipation of a rate hike, being slightly short of the dollar. I would either go into this one neutral or long. I just got a funny feeling he's going to carry on talking tough, and the market is, equities in particular, are expecting the pivot. I don't think they're going to get it. Funnily enough, the Bank of England, my favourite friends down the road in Threadneedle Street, prevaricated for so long. I just think they're going to muck around again. They're going to do 50 basis points, and sterling's just going to get slammed again. I'm now looking for 107.40.
107.40. Wow. Okay, so that's a juicy and that's a big call. But let me ask you this, because as traders, we need to know, where are we wrong? I mean, like where do you draw the line in the sand and you say, you know what, I was wrong, and the sterling is going higher, and what point is that for you?
Oh, 107.50.
Okay, well okay. I thought you said 117.50, and I'm like, okay, that makes sense. But 107.50. Let's realistically though, at what point do you go, okay, we are starting to see some dollar weakness, and maybe the Fed doesn't go along with your plan, and they're not playing hardball. They want to be a little softer to keep, support equities or whatever, maybe loosen financial conditions a bit. So where do you?
I think 116.5. I'd start getting a bit twitchy on sterling.
Okay.
Having said that, they're going to loosen policy over here. Going to loosen fiscal policy. We're going to get tax cuts, I think, this week on Friday. We've got a mini budget coming through. And I think that the market's is great for the country, but I don't think the market's going to like this. So I'm really, really bearish of sterling. Funnily enough, I'm starting to get a little bit bullish of the euro, which is, apart from the fact that I spent much too much money in France last week, which may be the reason why. But I just think, watching energy prices, gas prices are dropping over there. maybe things aren't quite as bad as we all thought, and they are starting themselves to talk really tough on hiking rates. So I'm moderately bullish on the euro, bullish at the dollar, bearish at sterling. So make that what you will.
Well, okay. Let's talk technicals off the top of my head. Euro sterling's trading handedly above the 87.25 level last I had looked, and that was a big resistance. So do you think that you have to play long euro sterling from here?
Yeah, I do.
All right, well,
sure do. I mean, I think out of the three currencies, and my real background many years ago as an interest rate trader, and I think the interest rates and bond markets drive everything else. The bond markets really drive the world. The 10-year US bond is so getting sold, and the yields are so high. And I'm looking at it and going, okay, well, the Fed's going to definitely hike by 75. I personally think they'll do 1, but they hike by 75. The ECB, I think, has got another 75 basis points hike in it as well, and they're talking real tough. And the Bank of England is just, they're not saying anything. I think they're so scared. I think they'll come in and they'll do 50 basis points, and that interest rate differential will just play against it. You've got to sell sterling and buy dollars just for the carry, just for the interest rate carry.
Yeah.
So that's my fundamental gut feeling. The only thing which I've seen out, which worries me, was the PPI number out of Germany today, which I did write it down. And I can't read my writing now.
It was hot. It's hotter than the summer swell over there, right?
Wasn't it? 47% or something. I know some of that's electricity and energy supplies, but that must feed through into inflation sooner or later.
Yeah.
And I think that inflation is the story, and that's what we've got to follow. And central banks' reactions to it, and the Bank of England is just feeble.
All right. Well, that comes from the comes from the heart. It comes from the heart and the horse's mouth, I was going to say. Yeah. But Dick, I love catching up with you, every week and getting your views on the sterling and on the euro and on the dollar and on world views. So if I'm a trader, I'm hearing about you for the very first time. What's the best way to follow your work?
You can follow me. I post every day on LinkedIn under Pardus FX. On there, you can pick me up on Twitter. Often being rude about other football teams and loving my own football team, Arsenal, but talking about the markets a little bit. Or you can contact me direct at Pardus FX and just fill in info at Pardus FX, and I'll get back to you.
All right. Well, Dick, I want to say it's always nice catching up with you. And we missed you last week as you were traveling, but we'll look to catch up with you following. Get like a post-mortem on what happened with the Fed and what we're doing now. So I look forward to speaking with you next week, and thanks for spending your time with us. And if you like what you hear from Dick, make sure you give him a thumbs up. If you're watching on YouTube, subscribe to the channel so you don't miss any of this exclusive content with Mr. Richard Matthews. So Dick, we'll see you next week.
Have a good week. Cheers now. Bye.
Bye-bye. Hey traders, Blake Morrow here. Thanks for stopping by our YouTube channel. Don't forget to like, share, and subscribe to our channel. Also click the bell notifications so you do not miss any of our market-related trading analysis from some of the leading industry experts. Thanks for stopping by. We'll see you in the next video.